All right, so this is easy just to show you the basic stats of the trading. You can see that had some good days these past couple of days. Now, the most significant thing that I said before, the asymmetry that gives us the ability to keep everything under control, small drawdowns. Over this period, which is 226 days, my max drawdown has been 3.25%. This is the drawdown right here, and that actually happened right here, right here. That was my biggest drawdown right there. Now, there are other places where I came close to that. Now, 3.25%, I'm sure that that's kind of like a foreign stat to you. Not that a drawdown is a foreign stat, but that amount of drawdown is probably something foreign to you. Most people are happy with a 20% drawdown, and most loser traders are looking at 100% or 50% or 75% drawdowns, not 3%. Professional traders would give their left nut for a max drawdown of 10%. This is 1/3 of that, right? Now, will it stay that way? It's probably going to stay within that range, somewhere between 3 and 5%. I don't think it will ever really get too much above that, just the methodology that I use. The other thing you'll notice is that it's like a stair-stepper equity curve. You go up with some really positive trades, go sideways, go up, go a little sideways, go up, go sideways, go up, go sideways, go up, go sideways. And that's the way it goes. Generally, what happens is that we get a lot of fat tail winners, big wins, big chunky medium-sized wins, and then a lot of tiny little losses and tiny little wins. So the tiny little losses and tiny little wins are the sideways. Then you get these big wins where you just take off. Now, this is only almost 200 trades. That's a lot of trades. But when this gets to be 500 trades, this is going to look like a straight line. Of course, there's some volatility in there, but that's what you have. But it's minimal, absolutely minimal. So small drawdown. Now, here's the crazy part. The percent profitable or win rate, only 49%. However, in that period of time, in that 225 days, or about 2/3 of a year, a little less than 2/3 of a year, I've returned 41% on the starting capital. Started with 23,000, now up to 32,500 approximately. 40%. At this rate, I should do probably around, I'd say, I don't know, 60%, maybe 65% return. Now, here's the crazy part. With that $23,000 account, I never traded more than, say, let's see what the average amount of risk that I'm putting on. $145. That's the average. So when I'm putting a trade on, I'm not risking more than $145. That's 0.5% of the trading capital. 0.5%. Let that sink in. In my trades, where most people are putting on 5, 10, 20% of their trading capital, a lot of you put on 50% to try to make a tiny little profit. Then when that day comes when everything is due and you lose that 20, 30, 40, 50%, you're sitting there with your head in your hands, weeping, saying, what did I do? That never happens here. Ever. It can't. Well, it could. I mean, you could be dumb and overtrade, but we don't have to. This is the most efficient way to make money trading. I'm sure that there are other efficient ways to make money, but this is, from a trading point of view, this is the most efficient way that you can use your capital to make a return. And it's the least obtrusive. It's the easiest to manage. Now, I'm not saying that it's easy. You have to learn how to take profits, and it's a continuous process. You're continually getting better. How long will it take you before you're absolutely continuously profitable? How long do you think it will take? Is it going to take 2 weeks, 2 months, 2 years? 2 years is probably closer for most people, because how do you know you're consistently profitable unless you can do it 2 years in a row? Now, if you can do it month after month after month, you still don't know if it was that market type. Maybe you were just in a market that was serving it up for you. You won't know until you apply your strategy in multiple different types of markets. And the only way you're going to get there is through consistency. And the way you're going to achieve consistency is through a framework and a process. And then also to have somebody over you, a coach, a mentor, to keep you accountable. That's how you get that kind of equity curve.